As someone 25 years covering tech, I mean, I believe this is the scariest time that I've seen the markets, but specifically for U.S. tech, because it's really it's really an Armageddon that's come from a supply chain perspective, and that's why we've been so vocal. And I think it's been almost sad to see, because I think as these continue, these tariffs, it would set the U.S. tech industry back a decade.
So, I mean, some of the tech spending is almost maintenance spending, but a lot of it is incremental and new stuff and AI investment. People were taking up their Capex numbers huge. And what's happening? Is that just on the sidelines, paused?
Look, and Paul, me and you have talked about this for years, right? And it's a fourth industrial revolution. But the reality is that now Capex, new projects, halted, getting cut across the board. And that's why you can't put the genie back in the bottle. Essentially, what you've started here is a huge sort of Capex decline that you're going to have to see number cuts across the board. And look, for these tech companies, I've talked to so many executives over the last week. You can call Paul Sweeney, Dan Ives factory in the Midwest, hey, let's get those semi-chips from there. They don't exist.
Right.
That's part of the problem.
But pause and terminate are two different things. So I feel like a week ago, everyone was on the pause button. Are you saying now we're in the termination phase of projects?
I think we've gone from pause to something that's 3 to 6 month delays. And ultimately, companies, they don't know what's happening in terms of their businesses. So it's like if they were going to spend $100,000 in incremental cybersecurity, maybe now you put that on pause, $50,000. You don't know what your CapEx budget is. So going back to like Alex, what you were talking about before in terms of the Boeing, like who pays it. Now it's like a Jenga puzzle. And that's always been the frustration here, is that what's happening, even when you get deals, the damage is being done in real time. And that's what the stocks are telling you.
What do you expect to hear from tech company executives this earnings season?
I mean, we just had silence for like the last 3 seconds, kind of that when it comes to guidance, because Paul, no one's going to give guidance. And the reality is that as we take stab at numbers cuts, right now, these tech stocks, like to your question, like NVIDIA, Apple, Microsoft, you're baking in 10 to 12% cuts into stocks today. So forget where Street is. Street, those numbers are 10, 12%. The reason we haven't downgraded any stock and we're still bullish on NVIDIA, on Microsoft, on that, because my view is like you start to get another 5, 10% cuts to these stock prices, you start to bake in a 20% cut. And I think that's where you start to get, you're seeing some of the bounces now because of that relative. Street's already ahead of where ultimately the numbers are going to be.
Which of the Mag 7 is last on your list for any kind of hope at this point?
Look, I would say I'd almost like rephrase it in the fact that what's the one that's most massively, sustainably impact? It's Apple, and which is obviously our, one of our favorite names, because 93% of iPhones are built and made in China. Any concept that that's all a snap of the finger is going to happen in India, I mean, I'm playing the Masters this week, okay? Same chance. So the reality is, like, where do they go? Do they call 1-800-Navarro? Hey, what do we do? There's no alternative. And the problem is that what does that do to gross margins? That supply chain, and even when you look at Vietnam, that's why you are basically taking an American technology icon here, in terms of Apple, and you're cutting it at the knees. And that's essentially what these tariffs have done. And that's what we've talked about. It's an Armageddon-like move that needs to be stopped and negotiated. Otherwise, the damage becomes more permanent.
I saw a lot of tech execs at the inauguration. I've seen them kind of hopping on the Gulf Streams, making their way to Washington. They didn't get much payoff on that, did they?
No, because I think, they're there.
That's the oil guys.
Oh, yeah.
And they're there thinking, hey, 15% reciprocal tariffs, we could live with that. Then the chart, without living infamy, comes out, whatever, call it, trade deficit converted into some odd Goodwill Hunting, MIT lab calculation. That's a tariff. And that's where it all changed. Because how do you start negotiating? And this is the problem on companies and what we're seeing. How do you start negotiating If I came in here and said, my name's LeBron James and I play in the NBA, you're like, what? How do you even start? And I think that's part of the frustration with those numbers.
So why do you still have a buy on all these companies?
Because my view that this is over the weeks, over the months. If I thought
But if it's Armageddon and they have to fundamentally change their whole business model.
If this was permanent in its current form, you downgrade every stock in terms of the view. My view, similar as how with 25 years, how we did in terms of financial crisis, 2008, 2009, COVID playbook, 2020, it's the same playbook. 2Q, 3Q, toss it out. I'd say for the next 3 quarters, you're basically going to toss out as an investor. They're almost washes. Investors not going to look at it. We view it as the chaos gets to some normalized baseline. You start to look at 26 numbers, and that ultimately is how you justify names. But the reason we don't downgrade is our view that this is something, whether it's weeks, months, transitory, I hate using the word, but in some way that this is going to be negotiated.